Hello and good morning friends, welcome to the CEC-UGC live lecture. Dear friends, with our 9th session on financial accounting, so far we have conducted 8 lectures in this very series, and in today's session we would be discussing on purchases books and purchases return books, debit note, and in the second session we would be elaborately defining and describing on sales book and sales return book and a credit note. Dear friends, for this discussion we have again with us in our studios Mr. M.C. Sharma. Mr. M.C. Sharma is Associate Professor in Department of Commerce, Shahid Bhagat Singh Evening College, University of Delhi. So without wasting any time, I would like to welcome our guest Mr. M.C. Sharma, under whose able guidance we would be first discussing on purchases book and purchases return book and debit notes. So hello sir, welcome to the EDUCET lecture.
Thank you. Dear friends, in my last lecture we started discussing on the subsidiary books, which are to be prepared by the large firms or having the large volume, and in addition to the journal. So the subsidiary books are basically special purpose books which are prepared to record a special type of transactions. As it is a part of the journal, so it is also called the subdivision of journal. Maintaining the subsidiary books is very helpful in different ways. One is the division of work. Work can be divided among the accounting staff, like sales book may be prepared by the separate accounting person or accounts assistant, and purchase book may be prepared by the others. So the work may be divided. Then it also promotes the specialization and efficiency. It helps in availability of timely information and it also provides facility for easy checking. There is a flexibility in the system. Whatever number of the special purpose subsidiary books you need, it depends upon the nature and size of the business. And it is also very easy to fix the responsibility when the different books are prepared by the different persons. And as we told you in the last session that we prepare the different type of books. For cash receipts and cash payments, cash book; banking transaction, bank book; petty cash book for petty expenses; and purchase book for credit purchase of goods; sales book for credit sale of goods; and purchase return book for the goods returned to supplier; and sales return book for the goods returned by the customers. And bills receivable and bills payable books are prepared respectively for the bills receivable, negotiable instrument, and bills payable. So in last 2 sessions we discussed the cash book. Cash book is prepared to record cash receipts and cash payments. And the 4 types of cash book we discussed, that is one, the simple cash book or single column cash book, in which we record only cash transactions. Another, cash book with bank column, in which we record cash transactions as well as banking transactions. Another, cash book with bank and discount column. This is also called 3 column cash book, and it has the 3 columns of amounts, one for cash, other for banking transaction, and the other for discount. And the petty cash book to record petty expenses. And we also discussed how to post them into ledger. As we know that the cash is a real account, so the debit part comes in and credit part goes out on the basis of the cash receipts are debited and cash payments are recorded on the credit side. And in today's session we shall discuss purchases book, purchase return book, and debit note, and how to prepare them and how to make posting into the ledger from purchases book and purchases return book. So we start from the purchase book. Purchase book is a special journal or a subsidiary book which is prepared to record credit purchases of goods or raw materials, and this should be important, or it should be noted that cash purchases are not recorded in this book, because cash purchases are the part of cash transactions. So, they are recorded in cash book. And another important point is that cash or credit purchases of assets or any other consumable are also not recorded in this book. Cash purchase of asset like furniture purchased, machinery purchased, this is the part of cash transactions. So, it will be recorded in cash book. And credit purchase of asset shall be recorded in journal proper, because the asset is not the goods. So, it should be very clear that the purchase book is prepared for credit purchase of goods only, because while in our earlier lectures we told you that purchase account means only for purchase of goods. So, purchase of any asset or any consumable like stationery which is for consumption, it is not to be recorded in purchase book. Now, you see the format. The format of the purchase book, it has the first column for the date of transaction, then invoice number. You know that whenever you buy any goods, you get an invoice, a bill. So, the invoice number. Then in particulars column, the supplier's name or creditor's name, measures in the first line, and the detail of the items purchased with rate. It means quantity, description of item and rate, and then the amount is to be recorded first in detail column. As there are more than one or two transactions, so we could write them in detail column, then making a total, and then if trade discount is given, then we shall deduct the trade discount, and final amount shall be recorded in amount column. Then in second transaction, again similar, quantity purchase. Sometimes there may be a sales tax which we are paying. So, if we are paying for the sales tax, that it should also be added and shown in this particulars or details column. At the end of the period, this may be normally a month, the total of purchase account is made, and this total is transferred to the purchase account. Now, how to make posting into ledger from purchases book? The transactions recorded in purchase book are to be posted on the credit side of accounts of the suppliers or creditors, because suppliers are giver. So, whenever we are preparing their account, it is a personal account. So, on the credit side, we shall make posting by purchases account in particular column, and folio number as already discussed in previous lecture, that the folio number of purchase book will be recorded in ledger, general folio, ledger folio JF column, and in ledger the purchase book folio number shall be recorded. So, they are the cross for the verification. Now, we will see one example. The example we are given only the two transactions here. That record the following transactions in purchases book of Messrs. Sundar and Company, a cloth merchant, and post them into ledger. So, detail is given for the, we have taken two transactions for January 3 and 20, and first transaction is bought from Manoj and Company Delhi, 30 pieces of woolen cloth at rupees 370 per piece, 50 pieces of suiting at rupees 100 per piece, and 120 pieces of shirting at 50 rupees per piece. Another purchase, the purchased from Ramesh and Son, Surat, 150 pieces of coating, that rupees 80 per piece, and 50 pieces of shirting at rupees 60 per piece. Sale tax is given in this second case 5% and trade discount 10%. And this is the imaginary example, and so we have assumed to explain the transaction of sales tax and trade discount also. And now we see how the purchase book should be prepared. So, in the purchases book, the date column, the date of transaction January 3, invoice number imaginary we have taken here, and then particulars Messrs Manoj and Company Delhi, then detail of the items 30 pieces of woolen cloth at rupees 370 each. So, 30 multiplied by 370, the amount is 11,100, and then 50 pieces, then 120 pieces, 50 pieces at the rate of 100, and then 120 pieces at the rate of 50. So, this total amount is the 22,100 which we recorded in the amount column. Now, another transaction with the imaginary invoice number we have taken 150 pieces first, then at 80 rupees each, so 12,000, and 50 pieces of shirting, that 60 rupees each, 3,000. So, total amount is 15,000. Here in this second transaction, as you see in the question, that the sales tax 5% and trade discount 10%. It should be noted that the sales tax is charged on the net amount. So, we have to deduct first trade discount. So, 10% of the gross value 15,000, 1500. So, the balance is, or the net price of the goods is 13,500. Then we have to add the sales tax at 5% and 675, and so the total amount is 14,175. So, as I told you that at the end of the period, that here we assume the month of January, the total of purchase book is to be made. So, here in this case total of purchase book is 36,275. Now, we will see how to post the transactions from purchase book into the ledger. So, we have to prepare here the account of Manoj and Company, Ramesh and Sons, purchases account, and you see the Manoj and Company, the Manoj is supplier. So, on the credit side we have given by purchases 22,100, and Ramesh and Sons, he is also a supplier. So, credit the giver. So, his account has been credited by 22,100, and the total is to be this amount is misprint, typing error. The first amount is 22,100, while the second amount is 14,175. So, in purchase account we shall debit 36,275, and the detail we could give the total purchases for the month of January. Now, we see there may be the big businessmen dealing in more than one types of items, and if we are recording all type of goods in the one purchase book and one column, then if we want to know the details of the purchases, then every time it is to be calculated by the accountant, and it will be time consuming, and the chances of error are also there. And as we know that the accounting is an information system, it must provide timely information, valuable and correct information. So, if we want to make a record of the separate record for the each type of purchases, then in purchase column we can have more than one column, and for each type of goods or material. So, it will help to provide the more details and transparent information about the purchases. You see this format of a multi-column purchase book, and in this multi-column purchase book we have assumed that the a books and stationery merchant, and he want to make the record separately for school books, for college books and stationery. So, he has made the three different columns for each type of the goods, school books, college books and stationery, and one column total which will provide the information about the total purchases. So, first transaction we assume that purchases from Messrs ABC and total amount is 12,000, out of that 4,000 are school books and 8,000 rupees college books. So, detail is available. Similarly, purchases from Messrs XYZ Company 7,000, all is stationery. So, 7,000 in a stationery column, and from Messrs JMD the total purchase 6,000, having 6,000 of school books. So, at the end of the month we have the total. Now, if we want to make only single purchase account, we can make the purchase account, or if we want the separate purchase account, so we can have the separate purchase account. So, the 3 purchase account may be opened in the ledger: the purchases school books, purchases college books, and purchases stationery. Now, we shall discuss about the purchases return book. As we know that many times the goods purchased by a firm may not be up to the mark. It may be defective, it may not be according to specifications given by the purchaser while placing the order, and sometimes the quantity received may be in excess of the quantity of order placed. So, these are few reasons when the goods may be returned to suppliers. So, this is to be recorded in a separate book which is called purchases returns book, or it is also called returns outward book. Why we call it returns outward? Because goods is going out from the business. So, this goods is to be recorded separately. When we supply the goods to, when we return the goods to the supplier, so we know that a documentary evidence is required to remember and to record. A source document, a voucher is required. So, we normally, the firm has a document which is called debit note. So, debit note is issued by the firm, and in that the firm inform to the supplier that we have debited your account for the goods returned to you as per details. You will see its format also. So, when transactions of goods are few, goods returned to supplier, then it is not necessary to prepare a separate purchase book, because if there are few transactions, they may be recorded in journal proper. Why we call it that subsidiary system, or this accounting is the flexible system, and because flexible, because it depends our requirement that how many books we need to maintain. It depends our need of the firm, size of the business. The format of the purchase return book is quite simple. The date of transaction, particulars, that the name of the firm with the detail of the goods returned by the firm, and the debit note number which we have issued, and LF is ledger folio when the posting will be made into the ledger, details of the goods and the amount. At the end of the accounting period, we shall make a total of this purchase return book, and the total amount shall be credited in the purchase return account. We know that the purchase return means the goods goes out, goods is a real account. So, as per rules of debit and credit, debit what comes in. So, purchase account is debited for purchase of goods, and credit what goes out. So, the purchase return account is credited for the goods returned by the firm. Now, the question arises, how to make posting into ledger from purchase return book. As we know that the transactions recorded in purchase return book, they are basically for the goods returned to the supplier. So, when we shall make the posting into the supplier's account, so supplier is a personal account, and personal account rules are debit the receiver. So, when we are returning the goods to the supplier is the receiver. So, we have to debit his account, and in particulars column we record to purchase return account, and the respective amount, the date of transaction, the ledger folio we have to record. At the end of the specified accounting period for which we are maintaining the purchase book, the purchase return book's total shall be posted on the credit side of the purchase return account, and by recording or writing on credit side by purchases returned for the month of January, February, whatever it is. We could see this with the help of one example. Here the few transactions are given that we have to record them in purchase return book and also post them into ledger. January 4, goods returned to Sundar Electric Store, 5 ceiling fan at the rate of 550 each and 1 electric iron at the rate of rupees 250 each and trade discount 10%. Trade discount is basically that whatever the trade discount we availed at the time of purchase, the same trade discount shall be considered while returning the goods also. So, we need to check the bill or invoice for purchase, and whatever the trade discount we got, we have to also make adjustment for that here. And second transaction on 30th January, the goods returned to Rajan Electric Company, 2 water heaters at the rate of rupees 200 each. Here trade discount is 15%, and in third case the goods returned to Rajan Electric Company, the 2 dozen bulbs at the rate of rupees 250 per dozen and trade discount is 10%. So, see how we shall record in that book. The firm's name is at the top, Ravi Electricals Limited, and purchase return book. So, first column for date of transaction. So, on January 4, we returned the goods to the supplier Messrs. Sundar Electric Store, details of the items, 2 ceiling fan at 550 each and 1 electric iron at 250 each. So, this detail column and total is 3000, 10% trade discount 300. So, the net amount for which we have returned the goods to Messrs. Sundar Electric Store is rupees 2700. Second is Messrs. Rajan Electric, the 2 water heaters at 200 each, amount is 400, trade discount is 15%. So, the 60 trade discount deducted and net amount is 340. In third transaction, again the Rajan Electric Company, the 2 dozen bulbs at 250, so the gross amount is 500 and trade discount 10% 50, net amount 450, and the purchase return, the total is 3490. Now, we will see how to post them into ledger. So, first posting into the account of Sundar Electric Store. So, the purchase return, as I told you that the Sundar Electric Store, the personal account of artificial nature. So, debit the receiver. So, put to purchase return account, debit side 2700. Then Rajan Electric, we have returned him this firm to goods on 30th January, 13th January and 22nd January. So, both the returns on particular column, first was for 340 and second was for 4500. Third account we have to prepare for purchases returns account. The total of the purchase return account, this is year 3490, shall be posted. Here we also mentioned purchase return account credit, means it will be posted on the credit side. 31st January by purchase return for January 3490. So, this is the posting from the purchase return book. Now, the one document which we discussed with you just now, the debit note. So, we will talk about the debit note. When a firm returns goods to its suppliers due to some reason, maybe defective, maybe not as per order specifications or in excess of the quantity of order placed, it prepares a note explaining why the supplier's account has been debited. It is a memo or memorandum type document which is sent to the supplier together with the goods return, and so we are informing him that we have debited your account, so we call it a debit note. So, it is prepared in duplicate, original copy is sent to the supplier to whom the goods are returned and duplicate copy is kept in the office for its own record. Normally, the duplicate copy is also may be sent with that, or some firms maintain it in triplicate. original copy handed over to the supplier, and in duplicate copy that the receiving is taken from the supplier, and in the triplicate is the already fixed in the printed form book. It is not necessary that every firm is maintaining, and in real life also you see sometimes you purchase some goods and it is defective and you go to the shop. When you go to the shop, the replacement of the goods is not available, and normally shopkeepers do not return back the money. They say you can exchange or can buy any other item, but the item which you want to purchase is not available, or the item which you want to replace is not available on the same day. Then informally you will find in the local, in real life, he will give a slip or its visiting card and mentioning on its back that 4,000 rupees goods returned on this date, and so he say keep this card and come with me, and whenever you come after few days you can get the value of that amount for which you have returned the goods. So in the real and practical life, basically these are the consumers do not maintaining the record properly, so they do not need a debit note or credit note type things. So they get only the piece of paper or a slip with the stamp of the shopkeeper can work for us, we are satisfied. So in today's session, this session we have discussed these three books, two books and the one instrument, debit note. And in this session we shall discuss the few more new topic, that is sales return book, sales book and the credit note. These are also the sales book and sales return book is also a subsidiary books which are to be prepared for the sales of goods, credit sale of goods transactions. And before starting this topic, a small part of that previous session, that the how the debit note is prepared was left. So first I will show you that the format of that, and then we shall start this topic. This is the sample debit note, name of the firm at the top, Messrs SPH Computers Limited, their address, serial number and the right side the date. Debit note what is mentioned, and the debit note has been issued by this company to Messrs Durga Traders, and mentioning that we have debited your account for the following. Particulars they are giving: the goods returned to you being not as per our order, that is the 10 pen drives of 4 GB each at rupees 100 each, 1000, 2 boxes of CD at the rate of rupees 150, that the 300 total value is, the gross value is 1300, and 10% trade discount at which it was purchased 130, so net amount is 1170, and this is recorded in the purchase return book. So this is that format, this is very easy, and now we come back to the topic of the current session, and that is the sales book and sales return book and credit note. So our session objectives are how to prepare the sales book, sales return book, and how to make posting into the ledger accounts. So now what is a sales book? Sales book is a special journal or a subsidiary book prepared for recording credit sale of goods only. Credit sale of goods only means cash sales are not recorded in this book, because these are cash transactions and these are to be recorded in the cash book only. The source document for entries in the sales book is sales invoice. When we sell, we issue an invoice, so that invoice is there with the firm. Transactions are recorded in the sales book on the basis of the sales invoice and by the firm, Then the cash or credit sale of asset. Sale of assets, cash sale, it will be recorded in the cash book, and credit sale will be recorded in the journal proper. They are not part of the goods, so they are not recorded in the sales book. The format of the sales book is date of transaction, then invoice number, in particulars, that details of the items, that is quantity, description of item, and the rates and the amount. If more than one item are there, so whatever it is, the 2, 3, 4, the all details with rate we need to record, and amount is to be recorded in detail column. Then we have a total. Then if there is any trade discount, then this trade discount shall be deducted and net amount shall be recorded. And at the last column we are making total for the sales for the month. So, that is later posted in the sales account is credited. So, how to make the posting into ledger? When the transactions which are recorded in the sales book, basically they are credit sale. In case of the credit sale, the customer is or the debtor is buyer, he is the receiver. So, as per rules of debit and credit, for personal accounts, debit the receiver. So, all posting will be made into the customer's account on the debit side by writing words to sales account in particular column. And folio number in the sales book for into that sales book folio number in the ledger in JF column, and the folio number of the ledger in the sales book against the customer's name. Now, you see one example. Record the following transactions in the sales book of Messrs. Sundar and Company and post them into ledger. And we have taken here the given in the question 3 transactions. Sold goods to Ramco Electric Store on credit, 20 water heaters, 50 dozen bulbs, and rates are given. Here the packing and delivery charges rupees 100, trade discount 10%. In second transaction, sold goods to Raman Lighthouse for cash, 12 electric irons at 175 each. I would like to explain, I have given this transaction intentionally in this example because in examination sometimes the cash transactions may be given in the question and you are asked to prepare sales book. So, by mistake the students also record the cash transaction in the sales book, and that is wrong. So, it should be noted that the cash purchase of goods, cash sales of goods is not recorded in sales book. In third transaction, the sold goods to Nakul Electric Company, 20 table fan at rupees 500 each, trade discount 10%, sales tax 5%. Now, the sales tax 5%, although we have discussed in the journal chapter that accounting for sales tax collected by a firm on behalf of the government from its customers, and after some time it is paid to the government, while the sales tax when we pay at the time of purchase, it is the part of our cost. So, we do not make any sales account separately, we add it to the cost of goods. So, while in this case the sales we need to differentiate this, the treatment of sales tax. So, we shall record only the 2 transactions, cash transaction will not be recorded. The first transaction on January 4th, Ramco Electric Store, 20 water heaters at 160 each and 50 dozen balls at rupees 50 per dozen, and the total amount 5,700, trade discount 10%, 570. So, net amount is 5,130, and the packing and delivery charges we are also charging from the customer. So, they are also to be added in the bill, that rupees 100. So, the total amount which is receivable from the customer is 5230. Second transaction, Messrs Nakul Electric Company, Ramnagar, that 20 table fans at 500 each, the gross amount is 10,000 and trade discount 10%, 1,000, no, net purchase sale price is 9,000. Sales tax is chargeable on net sale price. So, at the rate of 5%, 450, then total amount is 9,450. Then we have made the total for all this both purchases, and that is 14,680. Now, we need to take care, okay, how much amount should be credited to which account. In this total details, the sales income is only 14,130, because the 450 is the sales tax collected by the firm, which shall be credited to the sales tax account, and as per the rules of the government, the sales tax shall be paid to the government. And packing and delivery charges rupees 100, it is not the part of goods. When the firm will pay packing and delivery charges, it makes the simple entry, packing and delivery charges account debit to cash account. So, it is basically decrease in expenses, because the firm's expenses are decreased, they have charged from the other party. So, this is to be credited to the packing and delivery charges account. So, this is the detail which we need to keep in mind. Now, we will see how it should be posted into the ledger. Ramco Electric Store, they are the receiver of the goods. So, on the debit side, to sales account 5230. Another party, Messrs Rajan Electric Company, and the to sales 9450. Total sales is 14,130. In this case, we have to prepare two more accounts. One is sales tax account. It is a liability, increase in liability credited, and so by sundries as per sales book for January 450, the total amount is recorded. Similar for packing and delivery charges account, the 100 rupees is credited to packing and delivery charges. Basically, it is decreasing the expenses, so we have credited it. So, it is a few differences while making posting or treatment of the credit sale and credit purchase. In credit purchase, sales tax is the part of the cost of purchase. So, it is included in that, and we do not prepare a separate account. But if it has been the VAT, that is the value added tax, then the treatment will be different, and as we have already explained in the chapter of journal, that one is VAT paid account, which we pay on purchase of goods. Another is VAT received account, which we collect from our customers at the time of sale of goods. And then the net VAT payable to the government is paid to the government. So, that if there is a VAT in the case of while preparing purchase book and sales book, then the same accounting treatment which I have already explained in the chapter of journal shall be kept in mind. Now, we are talking for a large firms dealing in the more than one type of the goods, having the different counters. So, if the goods are purchased or traded by the firm in the several types, then firm, if it require, can maintain the record of the each type of the goods, and for this purpose it has to prepare the multi-column sales book. It means the different column for a different type of the goods sold, and this is a format. If a stationery or the bookshop, stationery and bookshop want to maintain the separate records for the school books, college books and stationery, then they can have the three different columns in the sales book, and one column for total, and all sales will be recorded and classified accordingly. Now, we also see one example. Enter the following transactions in the column or sales book of Messrs. Suresh Furniture Mart. 2015 dates for July are given and transactions are given. Goods sold to Messrs. Naman and Company, steel furniture, wooden furniture, plastic furniture. So, basically the firm is dealing in furniture of all types, steel furniture, wooden furniture and plastic furniture. The next sale is given, goods sold to Messrs. Raman Store, wooden furniture and steel furniture, and another sale is given, sold to Messrs. Manish and Sons Kalkaji, plastic furniture, steel furniture and wooden furniture, and we need to record in the column or sales book. So, we have the separate column for steel furniture, wooden furniture and plastic furniture. So, you see how the solution will be presented, that the first column for the date of transaction and the particulars, these are basically the customers to whom we have sold the goods. So, in first case the goods sold to Naman and Company, steel furniture for 5,000, wooden furniture for 3,000, plastic furniture for 6,000. So, the total amount is 14,000 in the total amount column. Similarly, the goods sold to Raman Store, that is steel furniture 2,000 and wooden furniture 4,000. So, the total amount is 6,000 of sales in total column. Then next is Manish and Sons, and the sale of steel furniture 8,000 and wooden furniture 5,000 and plastic furniture 4,000. So, the total sales is the 17,000. So, this total is here in the last, total sales 37,000, total sale of the steel furniture 15,000, total sale of wooden furniture 12,000 and total sale of plastic furniture 10,000. How to make posting into the ledger? When we shall make posting into the account of Messrs. Naman and Company, so the Naman and Company is the receiver of the goods. So, their account shall be debited for rupees 14,000. If you want to see the detail, we can check in this multi-column sales book. Debit side to sales account 14,000. Similarly, when we shall prepare the account of Messrs. Raman Store, debit side to sales account rupees 6,000, and in the account of Manish and Sons, debit side total sales 17,000 and then the total of this sales 37,000. The posting will be made into the sales account on the credit side, 37,000 total sales for the month, whatever it is, here it is in this May. So, for that. Now, sales return book. Goods returned by customers is received in this book, is recorded in this book, and it is also called returns inward book. Why we call it returns inward book? Because the goods is coming to the firm or the business. So, it is the inward direction of the goods. Goods may be returned by the customers due to the different reasons. That goods may be defective, it may not be according to the specifications for which the order was placed, and the quantity of goods dispatched may be more than the quantity of order placed. So, it is the defective, the customer will return not up to the mark again, and in case of the excess quantity delivered to the customer, it will also be come back. Sales return book, and when we receive this sale from the customer, a credit note is issued by the firm that we have credited your account for the goods returned by you. As I told you that in real life, you do not get a proper credit note, but you get a slip from the shopkeeper if you have returned the goods and later you have been option to exchange it or to buy any other goods. Format of the sales return book, similar, date of transaction, then particulars in which the name of the customer with the detail of goods returned by the customer. If any credit note is there, then credit note number, ledger folio, details, that is amount of the different items of the goods and total amount. At the end of the accounting period, normally the small periods, the sales book is prepared, closed for every month. The total shall be made and the sales return account shall be debited because the goods is coming in the form. So, goods is a real account. As we told you earlier, the goods account is classified into 5 types of account: purchase account, purchase return account, sales return account and stock account. So, sales return is also a goods account. So, real account, so rules are debit what comes in. How to make posting from sales return book into the ledger? The transactions recorded in sales return book are posted into the personal accounts of the customers who have returned the goods on their credit side by writing in the particular column by sales return. Date, ledger folio, respective amount are also to be recorded. At the end of the period, like a month or fortnight or a week, the total of the sales return book is posted on the debit side of the sales return book. And in particular column, we record the 2 sales return for the month of January, February, March, whatever it is. Now, one example for this. 3 transactions of goods return we are given here. In case of the first transaction, Sundar Electric Store has returned 2 ceiling fan and 1 electric iron. Second case, goods returned by Rajan Electric Company, 3 water heaters and rupees 200 each, and trade discount is also there in first case also, in third case also. In third case, goods returned by Rajan Electric Company, 20 LED bulbs at rupees 250 each. So, Ravi Electricals, this the firm which is preparing the sales return book, name at the top, then date of transaction. First party who has returned the goods is Messrs Sundar Electric Store, 2 ceiling fan at 550, gross amount 1100. Then 1 electric store iron at 300 each, so 300, gross amount is total 1400. Trade discount is to be deducted at the rate of 10%. So, this is 1260 the net amount. And in case of the other customer, this is the 3 water heaters for 200 each, amount is 600, trade discount 15%, 90 rupees. So, it is 510 net amount. Another transaction, this party has returned the goods 20 LED bulbs at rupees 250, it is not per dozen, it is 250 each, by error it is the per dozen. So, the 5000 is gross amount and less 10% trade discount. So, the posting will be made in the account of Sundar Electric Store, Ranjan Electric Company and sales return account. So, these account the ledger shall appear in this format. Sundar Electric Store, credit because he is the giver by sales return, net amount 1260. Ranjan Electric Company, that credit side on January 13 and 22 by sales return 510 rupees and 4500. And total of all this sales return in the sales return account, debit side at the end of the month. that is 31st January to sales return for the January 2016. In this discussion, we also told you about the credit note. So, when a firm receives goods from its customers due to any reason, it has to issue a document acknowledging that goods returned by the customer that his account has been credited. So, we call it the credit note. But sometimes a customer, the other is also the party, the customer is also a firm, then it may already issue a debit note which we can receive. So, the debit note issued by the customer will work as a credit note for the firm. There is no need to issue a separate, but sometimes if firm want to issue, it can also issue this as a documentary evidence. If a firm is issuing this, normally these are in duplicate, original copies given to the customer who has returned the goods, and the duplicate copies kept in the office for future record and for the purpose of accounting. The format, we have taken this example from the same sales return, the first transaction, Messrs. Sundar Electric Store in the books of Ravi Electricals, 2 ceiling fan returned and 1 electric iron, trade discount 10%. So, we prepared this credit note and issued to Messrs. Sundar Electric Store and mentioning that we have credited your account for the following in particulars, that is for goods returned to you, for goods this is returned by you, it should be by you being not as per order. So, 2 ceiling fan 550, 1100. So, the same detail which we have mentioned in the sales return book, it is being shown here, and the total 1260. Normally, at the end of it is signed by the firm, some authorized person. Today in these both 2 sessions, we discussed the purchase return and purchase return book, and sales return book, and the relevant 2 documents, that debit note and credit note. Thank you, and we expect your some feedback and queries, and we shall continue the subsidiary book same topic. In the next session, we shall discuss bills receivable book and bills payable book. Thank you.
With this note, thank you, sir. Thank you so very much for giving us a very prolific session. And as Mr. MC Sharma himself said, that if you want to give your feedback regarding this particular lecture, or if you want to ask some questions, then you can mail us at info.cc@nic.in. Of course, your feedback are welcome, and the next time when Mr. MC Sharma visits our studio, we definitely would try to solve your queries which you would be sending us through mail. And for watching this lecture, very soon we are going to upload it on YouTube, and all the lectures concerning to financial accounting are there on YouTube for your accessibility the number of times you want it. So we would be meeting again very soon. Till then, take care. Goodbye. Thank you, sir. Thank you so very much.
Thank you.